All right, so daily closing thoughts, sp500 on the weekly. Look a little crowded because of those alert lines. All right, so we bounced off of weekly resistance, which is here. This is the H12 resistance and the 4-hour naked breaker block, which has been retested already. Now we're back under weekly resistance, so if we close the week underneath here, it's bad news bears. And when we get below the previous week's close and we close the week below there, it's even more bad news bears. It means that the bears are coming in pretty hard. And we're going to go down to test this support, if not break it. I don't know how the candle's going to close on the week, but it's not looking good. It looks like a flat out rejection. And I don't know, but like it senses to me that we're not at the top. I'm kind of eyeing some kind of this. It's looking like it's getting close. We would see something like this, where we would get like a yellow highlighter topping signal, and we're getting close. We've tagged some really high price point there, but that's kind of where I got my H12 level at. But yeah, we're getting really close to a possible top, whether it's from the money flow index. The institutions are switching short. The Q Spectrum 2, this is today, and it looks like we're getting close to the peak to where we're getting ready to roll over. We have Powell speaking tomorrow. We have CPI Wednesday, and from tomorrow to Wednesday, there can be a lot that happens, and we're just looking for clean signals to get in at a good risk to reward, and that's it, and just take our money and go. But weekly closing basis, it's not looking good for the bulls, and we are almost finished coming out of the bull trap. So if we were to classify as the bull trap at any time that price enters this channel, it's entered it a couple times and it's reversed, and that's where the bulls got it wrong. They were trapped. Now, where they would get it right is why I made this level. I made this level because if the bulls were to close the week, the bears would be invalidated. That kind of short would be invalid. But if we don't close the week above here, then it's still in the bull trap. That's just how I classified it. So this moving average channel is really important. And when we're in it, you don't want to get to lose your mind on like, oh man, it's going higher, I gotta buy. No, you don't. You would wait until we close the week above here. That would be the signal that the bulls are actually becoming increasingly right. But because we did not close the week above this level, which would be above the moving average channel on the week 40 period, then it's not that. So right now we have to treat it, we have to assume that it's a bull trap, and it's in the trap right now. And we are currently in the deviation, left shoulder, right shoulder portion of it. And on a daily closing basis, this is like the daily version of the trap. And it looks like it went in pretty deep, and then now it's coming back down. We closed the day here, and this could be support for us to attempt it again, which I believe it's going to do again. But it's too early to write that in. We haven't really retested the breakout. So we broke out on the day on this candle right here. This was resistance that took out the candle after it. And this candle here, it wicked into it, and then it got rejected. The bears were there. Now, we want to see a retest and resumption. We might get that into Tuesday overnight. We might get a deep retest. I don't know how deep it will be, but enough to where, I don't know, it could just, or it can stay where it's at. I have no idea. Like, trading Tuesday to Wednesday just doesn't sound the best. We want to be able to sell when it's high. Whenever it goes high, we'll just sell on a 15-minute market structure break. That's what we'll do. That's the playbook, just to keep it simple. And then on a slow signal 4-hour market structure break, and we're using market reversal EA, and this is the where it's at currently. We did have a more 4-hour breaker to the top, but the reward isn't that great. We can't get excited about something with a small reward. So anything that leads to a short to the downside, we're going to take it, and until we get a 4-hour breaker. Right now, it looks like we got a order block above us for a trade to go up, and I'm just not about that. Like it would turn into a nested breaker situation, and that's like a low risk to reward play anyways. So it just doesn't make sense even on like a scalping kind of sense. Like when we were in that chop right here on my auto squeeze that highlights it in the blue, this was perfect scalping heaven. Like I'm not a scalper, but once I figured out the range on the 1 hour, it was drawn in for me. It looked like it was perfect scalping heaven. You just resistance here, sell the tops, and buy the bottoms, pretty much. And you could tell when we're in like a tight range is when we're highlighted, and we're still in the tight range. It hasn't really broken out, so technically we're at the high end of the range. And do you want to be buying long on a high end of the range? No. Bad risk to reward. Just flag no. All right, we're running out of our 10 minutes here. Or at 6 minutes, so it's going to be quick. So we're in a nested breaker on the H4 here, so it's a no-go. You just don't want to touch it. And anything that's a short, when the price goes up and it's high, makes really good short. Just wait for confirmation. Mine's a 15-minute market structure break. Oil. Okay, we want to look at the weekly here. So oil is complicated. It's a complicated child. It actually reclaimed the support that was broken into resistance, now support. It broke above, now it's retesting for support. But yeah, I don't know. Like we got to kind of move this here and count that as support right now and waiting to see it flush out. We're just kind of we're speculating that this is going to hold and that this will be resistance. It's just it looks very unclear as to what's going to happen, but I'm guessing we're going to get some wicks and it's going to form a deviation. Maybe this is the deviation. I have no idea, but it apparently didn't hold this this low. It reclaimed it, so put it in a no man's land. That's kind of what I call that. It's I guess just going to follow up here, and then it's going to create that deviation. I don't know how it's going to look. Maybe this is the left shoulder, and then the deviation will be up here, and then right shoulder. I have no idea. I just know I'm shorted, and that's a good spot for me. Credit spreads. So we're getting to some interesting stuff. Credit spreads. I'm really curious to see what's going to happen to credit spreads, just because it's anyone's game here. So credit spreads. We were expecting to see a divergence in credit spreads. We got a huge gap up here on the week, and I don't know. That could be kind of telegraphing the pump, but we're in weekly resistance right now. And as long as we stay below there and we close the week below, if not below the breakout, that would be preferred. These gaps look like they're going to get filled, and one of these is going to be resistance. One of the, we just got to wait and see. No real way of telling. Now, the long-term corporate credit spreads, we're retesting resistance right now. We're hitting some huge resistance, whether it's weekly or daily. Definitely see it. This was the flip, and we closed the day below it. So I think the long-term corporate credit spreads has more fidelity for an accurate signal than the high-yield growth credit spreads. I don't know. That's me speaking out loud, but that's kind of just what I see. Now, the currencies, the Japanese yen and the euro, of course the dollar, we're expecting it to go down, so it brings it out. It only brings us to like the Japanese yen and the euro. So the euro is like an interesting case study right now. So we kind of closed above, and now we're just waiting to see what's going to happen next. Does this resistance and like how is this going to play out? Like is this going to be a lower high close on the day? So that's kind of just the big question. Is this the lower high? If it's the lower high, then that's it. It's done, and we would see it, purge this low, say that the bulls are wrong, and that's kind of what we're waiting for. We're waiting for a final kind of ending. It filled the gap here. Now it's got a new gap. I don't know. It's got to fill this imbalance, and we're gonna see where we close on the week, and then Japanese yen to not make it too laborious or too long. We closed the day below the daily support. Now we got to see just kind of where things go. I think because of Powell and the CPI, things are kind of getting delayed and pushed into the no man's land, which is fine. That's why we got to see after Wednesday how things close. We got to see how the week closes. That's going to tell us the most information, the most accurate. But as far as like what was defended, it was good that that zone that we were aiming for had a reaction. It's not like a super strong reaction, but it's something that could keep us in the game to have a greater probability of winning either on our trades or on the Covey portfolio competition per month. So that's pretty much the analysis. As far as like any kind of conclusions, videos to come. We're still working on that portfolio. Been really busy, picked up some extra shifts, so we're just kind of playing it by ear. Anyways, we got a lot of time before this actually becomes relevant. Trade plan for, I would say, after CPI, we're just kind of waiting for it. I already gave my general idea of the strategy approach I'm going to do. And then portfolio plan for Covey, it's pretty much set in stone. No one's got the size that we do, and no one's got like the same like kind of selection. And based upon that, if they don't have anything that's like that, that's high beta, that can give a reward like that, then best of luck to them. Like I think we don't really need to make any changes on sizing or different swaps of coins or anything like that. I think they're all just fine. We'll continue to monitor them and take a deeper look. I'm getting hammered on like engine and sand, but and also there was another one, Atom. But yeah, we'll continue to watch it and see if it's gonna. We're really shooting ourselves in the foot on the weekly close. That's really what it comes down to, is to see if things shake up at the end of this week. And maybe we got in too early. That's a really good point, and shows to our skill, which is fine, because if we can win first place like this, it says a lot. It says a lot that for one, we could see things coming farther ahead. Just we need to teach ourselves some patience and just give ourselves a fast and slow permission to be able to scale in and just tone down the antsiness, the itching to trade. So thanks for watching. See you in the next video.